What South Africa is doing with its freedom. A look at the achievements and challenges of the last 2 decades. My goodness, that sounds like serious strategic thinking.
In the size of the economy, the GDP has tripled from $140 billion to $400 billion, and this is all dollarized in this presentation. If you're poor in South Africa, and there are 15 million people living in poverty in South Africa, we'll show you that number. The question is, what has the ANC government done in the period of the 19 years? And there are 2 important standouts. The first is access to services, to free services for the population. So for those people who have very little resources, the provision of basic benefits of this kind, plus education and health, is very, very critical. We'll come back to the quality of that service that they've experienced. Similarly, it's important to measure South Africa in the world. So South Africa is a very small economy, roughly a $500 billion economy, but it has one important element relative to that, which is its market capitalization is twice its GDP. Now, that is a ratio that outstrips any other country in the world. We'll come back to the importance of the financial sector and the depth of the capital markets. Having said that, South Africa still is very small relative to the world that is occupied by the other nations. We're going to talk in tens. The tens are, what are the 10 major advances that have happened in South Africa? What are the 10 structural challenges that have happened in South Africa? And what are the 10 key issues that remain? Now, 94 to 2007 saw the peace dividend in the form of the economic boom of growth of 3.6% compound annual growth rate through the period. This again is dollarized. And then inflation falling from 9% at the beginning of the period to the inflation targeting levels of 3 to 6% set by the then Governor Tito Mboweni, who loves the slide because it shows how successful he was through the period. Notwithstanding that, South Africa has managed to achieve a slightly slower but still growing rate of around 2.5%. Of recent times, that rate is obviously slowing and is of concern at just under 2%. Government debt as a percentage of GDP has trended lower. You see that from 2007 to 2012, it has picked up from around 30% to around 40%. That is of slight concern, but it's not outside of the norms. Certainly when you think of Europe at around 80% debt to GDP, we are nowhere near those levels of worry, and the government debt service cost has trended down significantly right through the period. If you recall, in 94, South Africa was effectively a broken state in terms of a balance sheet. It was a negative $25 billion net open forward position that was inherited in 1994. And steadily, they closed the net open forward position. Here you can see it being closed. And then the net position rose on a gross basis to $50 billion that we have today. Now that is now getting into normative territory relative to GDP. It's not like it's a very strong position, but it's not a sort of reason for concern today, and it's a tremendous benefit to everyone that South Africa has managed to achieve that turnaround in gross reserves. On a dollarized basis, the Johannesburg Stock Exchange has performed very well relative to the Standard & Poor's 500. The depth and liquidity of the Johannesburg Stock Exchange effectively makes it the sole entry point for investors into the African continent, because when you compare an $800 billion market cap JSE versus $75 billion on the next biggest, which is Nigeria, there is no comparison. And then effectively 4.7 million people more had graduated also into the 7 to 10 category, meaning that South Africans are becoming wealthier and it's becoming spread, and racially we are seeing the rise of the African middle class in this period. This is a fundamental asset that has been created in the last 20 years. So remember, the poor are getting defended, the African middle class is rising, the African National Congress gets 2/3 of the vote. It's kind of a transmission bell. And then the question is that sustainable? Government grants and wage inflation, which is around 3% real in the period, has added significantly to this factor. It has brought its own problems of fiscal sustainability, because you've got 50 million people being supported by the state, and you've got real wage inflation, which is difficult for productivity and real growth. But when you look at it actually, on a unit labor basis, South Africa has gone from $8,500 per unit labor productivity to $25,000 per unit labor productivity in that 10-year period. So on a per unit labor basis, South Africa has become more productive and has grown by around 11%. Now, there are three factors here which are very, very important. One, we live with HIV with 4.6 million people. 4.7 million people are living in unemployment. On an expanded basis, including those who are giving up looking for work, that number is 36.8% of the population. And people living below the poverty datum line, as I said, is 15 million. So that triple challenge of the 4.5 and the 15, you have to bear in mind going forward. South Africa struggled through the period to spend more than 1% of its GDP on technology, research and development, whereas Korea is spending 3.6%, China is spending 1.7% with tremendous impacts. Finally, when you sum all this together, you get what we call the country share price, which is the sovereign credit rating. The sovereign credit rating has moved from junk status in '94, which reflected the broken economy we had then, through 2000 to investment grade and above investment grade. But look what's happened. We've just recently been downgraded to one notch above investment grade, and certainly if we fall below investment grade, the cost of capital is going to go through the roof at a time when infrastructure spending for Eskom, Transnet and others is a very critical piece, and they're already struggling with from a balance sheet point of view. So protecting our investment grade status is a net very, very important factor going forward. We used to say we lived in a poor neighborhood in 1994. Well, actually, we now live in one of the best neighborhoods for growth, because on a net basis, Sub-Saharan Africa was growing at 2.5% in the years 1980 to 2000. It's actually grown from the year 2000 to 2013 at around 5.5%, and we project that it's going to grow at 6.5% for the next 30 years. If it grows at 6.5% for the next 30 years on a net basis, it's going to be one of the fastest growing regions in the world. And as a consequence, we are getting disproportionate attention from the sovereign wealth funds, from the institutional investor community, from the multinationals. And a lot of what we do in Goldman Sachs is fielding those people into the continent through and via South Africa. Think of Walmart buying Massmart, or 51% of Massmart, as a vehicle to get access to the continent. ICBC for Standard Bank to get a vehicle through to the continent. When I visit China, and I've done that 12 times in the last 5 years, because the China-Africa trade is so important, and we've done significant transactions between China and Africa, the fact is that they are very good at utilizing leverage in the state assets. They have had no problem in selling state-owned enterprises into the market and creating modern market entities, be it construction companies, banks, and others, and having control of those entities with 75% of the share capital but 25% listed, and releasing capital for investment in other ways and modernizing the corporations. So if the Communist Party of China can do this, I don't see why South Africa should have an issue. So finally, the final thought. Effectively, we live in a good neighborhood, although a troubled world. We have incredible people in South Africa. There's no question of that. We need to deploy them effectively. The question is not about plans, and I'm saying this very publicly. It's not about the National Development Plan or the Growth Plan. We all know what needs to be done. We need to execute, and we need to become a lot better at implementation and execution and getting the best people to do the right things. And effectively, we have the people and capital, we have the talent and tools, and leaders across government, business, labor, academia, institutions, and civil society need to take their own individual actions, but also collective actions to make it happen. So I'm much more inclined to say, you know, what we should be doing is thinking about how to gainfully engage the youth who are unemployed in other activities. You know, obviously the question is, what do we do structurally with that level? And it appears to me that South Africa has not yet found the formula for addressing the unemployment rate. The only thing I take away from this analysis is that deindustrialization caused unemployment. And that deindustrialization, I'm sure, is what Anton can talk to you about, because that period 1980 to 94 was really when South Africa deindustrialized. And we just haven't recovered the mining or manufacturing base to create that employment.